Hmm? Good evening, everyone. Hello, everyone. How are you guys doing today? Is everyone doing all right? So we just sent the link out. We are waiting for people to join us. Hi, Hugo. How are you doing? Guys, let me know. Where are you watching us from? Nick said, hey, all good, thanks. And you, how you doing? Had a good weekend? Yes, definitely. I had a good weekend. I was working non-stop to prepare the tomorrow's analysis and all this stuff. From Portugal, Kevin from UK, Limo from London, Darius from Poland. Welcome, welcome everyone. How was your weekend, guys? Did you get some rest? Who was checking videos on YouTube about trading or trying to read the market and find out what's going on for tomorrow? Anybody? Misha said, hey, from UK. Hi, Isaac. How are you doing? So, myself and the Elevating Forex, of course, we'd like to welcome you to another weekly market watch, insights and predictions. Just to mention that this is not any education, any financial advice for anyone. Okay, so for those they see me for first time, who is here for first time? Let me know who is here for first time. Anyone? Hugo, up, you send something. Oh, I see. Trying to read the markets there. Perfect. Yeah. Here from first time Limo, welcome, and of course everybody else. From Nick from UK, it's my 6th or 7th time, I think, lost the count. Thank you so much, and of course most of you are here almost every Sunday. It means that you're finding value out of this one. So I'm glad for that. Now, for those who are here for first time, my name is Theo. I'm a visible person in all social media. Just to say a few words about myself, I'm a certified financial technical analyst. I hold the certification from the UK by the Society of Technical Analysts. I also hold the certification as a certified market technician from the International Federation of Technical Analysis. I've been trading for the last 12 years, actually, and I specialized in CFD trading as well as futures. When it comes to currencies, I like it the most, because by understanding the differential between one currency and the other, it's much easier to make some better informed decisions. On a daily basis, regardless the trading activity I have, I do extensive macro analysis for the news events and what's their potential outcome, and I send it out to some hedge funds, some prop firms that I have deals with them, and also I do detailed currency analysis for the same or some other companies as well. So it's not only the trading that occupies pretty much my time. I'm a published author in articles in reputable magazines as well, and many of you, maybe you've seen me around on YouTube doing webinars with John Bollinger, the gentleman who invented the Bollinger Bands, or Steve Nilsson, who wrote the books about the candlestick patterns, beside candlestick and how to trade profitably with candlesticks, and many other exceptional traders in the and very famous people in the world of trading. So what's going on with the market? So as you all know, we start from the weekly chart. By the way, last week was a little bit special week because we had the presidential elections in the US. So what we were expecting to happen, I'm not saying about the individual who elected as president, I'm talking about the markets, how the markets could react. I'm fortunate enough, or I was fortunate enough, being trading for the last 12 years, it happened, and I've been around to see how the markets react in previous elections. But this time it was a little bit different because there is a shift in the entire world in terms of financial sentiment. Now we also have geopolitical sentiment that we're going to find out sooner or later how the world is going to reorganize. Therefore, we were expecting a little bit different behavior in the market. The fact that we use technical analysis, by the way, can you all hear me and see my screen? Just to double check. Not to go until the end of the webinar and then you tell me, Theo, we cannot hear you. Okay, okay, thank you. So we were expecting the price to continue moving in the direction of the trends that we do on market analysis, but what we had to be aware of that, and it's what I explained previously, is the volatility that comes with the events and how we can place our stop loss and take profit targets in order to avoid this fake out stuff by the price. Long story short, the US dollar, at least at the first glance, it got appreciated and it sent all the major currency pairs to move in favor of the US dollar, which means that the euro, also euro was among the two weakened currencies. Last week it was the euro and the Swiss franc. Nevertheless, the bearish engulfing here, rejecting the 40-period moving average on the weekly chart and closing so bearish at this point, it indicates some strong selling pressure in the market. How can we use it in our advantage? Now, last week I used it more as a selling opportunities, but this week we want to be aware of few factors. First factor is that the price already tested a strong area of support or a demand zone. At this point here, as many of you maybe are watching YouTube videos, they name it as liquidation zone or whatever they name it. The implementation is the same, is that at the support area, the buy orders, the buyers, they get active, which means if there is enough buying pressure to push the price upwards, we're going to see the higher high, higher low formation. Now, what I would like to do from next week is to check if the price will stop somewhere here and print the reversal price action, then I will be looking to go short. When I will enter short from here, if the reversal price action occurred, I will have a stop loss that, of course, I will have a stop loss in place, and the stop loss will move to the break-even point as fast and as soon as possible. Why is that? Because we don't know if this support zone activates last Friday the buyers in the sense that they're going to create a new market uptrend. All right. Do you guys understand this? That's very important because people, they often come to me, and because I do private coaching one-on-one with traders, and people, they come to me and say, Theo, we don't understand, when can we stop looking for sell opportunities? When can we continue, and how we can do it? I mean, because we don't know what's going to happen in the market. We only have some ways to predict the price move. That's why we have to be very strict and also mechanical, as much as possible, to be mechanical traders. Guys, we are trading CFDs. There is leverage involved. Trying to use emotions and be more anything else rather than a mechanical trader, it's going to cost a little bit of psychological distraction, I would say. Okay, so if the price breaks below this demand zone, there is a very strong demand zone. I checked it on the weekly chart, and you can put it on your chart. It's about 1.0666, 1.0666. That's a strong level of support, and that's going to be the room of opportunity to trade short. Now, the hourly time frame, it won't be ideal to trade between this area and that area. So we have to go down to the 5-minute or 1-minute time frame to find lower highs and lower lows here. On the other hand, if the price will start making higher highs and higher lows, it can be very predictable because it tapped in on in the liquidity zone here, and we have a fair value price that's been sitting since last, I think, Tuesday or Wednesday, and definitely the price is going to move all the way here to test it. All right, so if the price start making higher highs and higher lows, we want to try and push to the upside. Then we're going to go with a trend. Next one, Australian dollar, US dollar. So this one here, I got a losing trade last week because I had an entry here with a stop loss above there, and the market traded far and beyond that one. I was going short on this one, to be honest. Anyhow, the market then, it gave a clear clue of what's going to happen, because this high here, it was high, higher high, yeah, or break of structure, whatever you call it. Then the price made a pullback, it moved upwards, and then it moved downwards, creating a lower low. So this, in technical analysis, we call it failure swing top. I repeat that. That's a failure swing top, because it failed to create a new market swing at the top. It didn't penetrate this swing high here. Okay, that's why we call it failure swing top. Now, what's the implementation and how can we use it? Well, a failure swing top is a strong indication that the market is not strong enough to push higher. Therefore, we better start looking for short opportunities until the next area of support. Next day, the market moved sideways here, and it created that nice move to the downside. So also based on the weekly candlestick, the doji candle here, let's call it that this is a doji, it's still below this 40-period moving average. Market also, it's a bit tricky here because it trades around the support. If we drag it a little bit to this side, but I'm telling you guys, if the price next week on the hourly time frame or lower time frame or 4-hour chart, I don't know what are you trading, if it's going to start making lower highs and lower lows, definitely it's going to be ideal currency pair to keep an eye on. Okay, and as always, an espresso at this time is very helpful. Okay. Someone says, I can't hear. I think is Himwa Emmanuel? It's only you that you can't hear. Guys, can you please type if you can hear me? Okay. Everyone else can hear, I assume. So I think you need to check your side with the sound. Tommy said, okay. Fred is having a soda. Better. What is it? A water soda? Moses says, hello, hello. So do you guys understand about this one? Now, what I would like to teach you tonight, it's kind of a secret in the way the price action moves, because I'm expert in price action trading. I can read you the price action with close eyes on the charts and tell you each and every candlestick to candlestick what's the implementation based on the overall picture, all right? Because it's different to see a hammer at support, and it's different to see a hammer at resistance. It's different to see a hammer in the during the beginning of a downtrend, and it's different to see a hammer after an extensive downtrend. Okay, so the price here started making inside candles at this bearish Marubozu candle. So keep an eye on that one. If tomorrow, when you start looking your charts during the Asian trading session, if you see that the price is still trading within the boundaries of this bearish Marubozu candle, most likely in the London or New York trading session, we're going to have a nice break to the downside. All right, please keep that in mind. Very important. And this happens all the time. I can show you numerous of times that this, if I just scroll back, I find it more on the 4-hour time frame, but again, there are so many occasions that this is happening. Next one, Great British Pound against the not Australian dollar, sorry, the US dollar. Last week we said the Great British Pound is around this support area. It bounced off the 40-period weekly moving average, and which is the 200 daily moving average. It's one of the strongest moving averages for hedge funds. And hedge funds, they guys, if you take all the money that the traders on YouTube, which even they have 1 million subscribers on YouTube, if you accumulate everybody's retail trader money on their accounts, maybe they don't sum up some of the trades some hedge funds they are placing in the markets. Okay, and I'm serious about that. I have a lot of friends that they work as hedge fund traders, and when I'm telling you about these moving averages here, the 40-period weekly moving average, which is the equivalent to 200-period moving average on the daily chart, or the 50-period moving average that I use on the hourly 4-hour time frame, you see me having them on the chart, they are exceptionally significant. So the price bounced off this 40-period moving average last week, and it created an identically price action. It's the one that we call train tracks, like it has, or squeeze top, squeeze bottom, something like this. There is another termination in Beyond Candlesticks book. by Steve Ninson. So if the price on the hourly or the time frame you execute your trade, if the price continues, makes lower highs and lower lows, definitely we're going to go for short. Now, this becomes a bit tricky because here we have the high and there we have the low. So in this time frame, the market, it's in a downtrend. Okay, it's important to say in this time frame because if you check the 5-minute chart, maybe you're going to see an uptrend. Okay, but the hourly time frame now, it's down. What we want to see is the price not to penetrate this high here before it continues with a new lower low. All right, that's what we want to see. It's not that it's very clear, this one. The reason is the sterling or Great British Pound, it's also a strong currency across the board. Okay, and that's the reason. If I have an other currency pair to trade against the US dollar, I will definitely go for that. Okay, and I will leave maybe this week the pound on the side unless something changes and we see a strong, let's say, directional move. Next one, the USD Japanese yen. Actually, write this down. All Japanese yen currency pairs, because all of them, they have the Japanese yen as the quote currency, which means it's the second currency on the list. So it's USD yen, it's Euro yen, it's Pound yen, it's Aussie yen, it's New Zealand yen, it's CAD yen, it's Kiwi yen. Okay, so we are expecting downtrends in all of this. Why? Because Japanese yen, it's showing some good signs of strength fundamentally based on the macro analysis that I conduct this weekend. And also, technically, most of them, they retrace 61.8% Fibonacci retracement on the weekly chart and ended up with a bearish reversal price action. So there is a high chance to see this move to the downside. But if the US dollar is a strong currency, and at the same time the Japanese yen, it's a strong currency, do you think it's a high probability trading setup to trade the US dollar and the Japanese yen against to each other, betting that this market is going to go short, it's going to go lower, which means the US dollar it's going to get weakened and than the Japanese yen? If now we know that both of them are very strong, or do you think it's better to check perhaps the Great British Pound against the US dollar, or even the euro against the US dollar? Do you see the price action on the euro? Do you see the price action on the yen? It shows that the pound is much weakened than the Japanese yen. The euro is much weakened than the Japanese yen. So if I have the opportunity, I will choose among these two. Also, look at this, guys. The New Zealand dollar, it rejected the resistance. Also, it closed below the 40-period moving average. So this is very, very high probability currency pair. But let's go back to the USD yen. If I have the chance to avoid this, I will avoid this. But on the other hand, we see that the price entered this fair value price here, and it didn't create any strong bullish candles to move away of this one here. Okay, so the only way for me to trade this one to the upside is to find the first swing high and the swing low. So this is the high and this is the low. Once the price moves away of this one and it creates a new market structure, then I will look for long positions. Alessandro said, let's go with the Euro JPY. Let's go with that one. Or if the price breaks below this one, but again, there is another demand zone down here. So the market, perhaps it's going to find some good buying activity. But if we look on the Great British Pound, Japanese yen, actually that made my I only took a couple of trades last week, to be honest. It was the Australian dollar, US dollar, which it was a losing trade. And then I had a winning trade on the pound yen and on the Australian dollar, Swiss franc. So let's check the pound yen. Why I took this trade short? Because last week, if you were on the webinar, we said that the weekly chart, it has a reversal price action. Here, didn't we say that? We said that, right? It's here. It's not something we said and we can change it afterward. It was there, that one. So we said that on the hourly time frame, in order to start looking for short positions, that was Friday, Thursday, Wednesday, Tuesday, Monday. The price was here. We said that once the price makes lower highs and lower lows, we're going to start looking for short positions. But the price started making higher highs and higher lows. What happened, though, is that after these highs, the price failed to make another high. So it created this double top, equal high. Double top neckline here, the price failed to penetrate the neckline, which means it created what we call a rectangle. Now, after we saw this, we could make a step back and understand that here it's the uptrend, then it's the distribution, and then the downtrend started. The downtrend started after the penetration of this low here and the creation of a lower low. So we have lower highs and lower lows. I explained to those that they are taking private coaching with me that to define a downtrend, we need to put together 4 points. We need a low that is low, a high that is lower than the previous high, and at the same time, we need a low that is lower than the previous low. So we have a lower high and a lower low formation. Then I was waiting for the pullback, and then I found this bearish engulfing price action at the London trading session. I told you multiple times that bearish engulfing, it's maybe the setup. I will not say 90% because I will be lying. I will say 99% of the times I trade bearish engulfings short and bullish engulfings long. Okay, that was a 2-to-1 trade and 2 point something more. And the reason I took it up to here because we had this zone there. So I'm still bearish on this one. I want to see the price to break below this low here and then continuing looking for short position. So you can keep this on your chart if you want. Also, I encourage you, if you are trading the London and the New York trading session, to mark the Asian trading session. You want to see how the price will move in the Asian trading session. Guys, these are some people, they are thinking, why to book Theo for private coaching and we don't want to pay? First, we want to make money and then we want to buy coaching. And trust me, being a trader, most of the times it doesn't work like this, because I also had for years, I had a coach helping me to go through and succeed in the markets. Okay, now there are some secrets in the markets which you don't really find them everywhere. Okay, those secrets we identified it based on our experience in trading. So like the one I told you with the Marabozu candles and the inside candles, the breakout, it's very, very solid. Next one, it's worth keeping an eye. Oh, let me show you the other trade I took before I forget. It was the Australian dollar Swiss. Why we had, and you should have taken, in my opinion, that trade, because we said that the Australian dollar was in a downtrend here. The price came up to a strong area of resistance on the weekly chart. Couldn't be stronger than that. The supply zone, it's been here for 1, 2, 3, 4, 5. 5 times the price tested this area. Every time it was testing this area, the price was declining. And also the 40 period weekly moving average was at the same area. So it could add much more bearishness into this one. On the hourly time frame, though, after I saw this extensive uptrend, I was okay. The market is going to crave post-side retracement. It won't go for for much time higher. And when it's going to be the best area for the hedge fund traders to go short on this one? And why the hedge fund trader? Because these guys, they're going to move the market. Let's face it. After I saw that the price failed to move any lower, I was okay, I'm going short here. I placed my stop loss a little bit above. It was about 22 pips. I placed the stop loss above this entry, above this this supply zone, and I was targeting for this inside support. Something else that I teach in my in the courses, the inside support and resistance are the most crucial areas. Okay, very, very significant areas. That was for almost 2.5% to 1. So I had one losing trade, so it was minus 1%, and then I had 2 winning trades, let's say average 2.5% each one. So it was plus times 2, so it was plus 5%, minus 1%, so it was plus 4% for the week with 3 trades. Okay, so I'm not saying that to impress you, I'm just saying that to show you what is possible and what can you also achieve. All right, let me read some questions here. Pound yen, is there any correlation between daily high and low from Asian to London session? I didn't understand very well your question, but I will answer. If a correlation between daily high and daily low from Asian to London session. Sometimes the price, not sometimes, all the time the price move in a wavy cyclical environment. Once, let's say, the New York trading session ends as a bullish trend, then we expect it in the during the Asian trading session, the price to create some sort of pullback to give the opportunity to the London trading session or to the New York trading session to re-enter and push the price where it has to go. All right. Rarely we're going to see the price start from the New York trading session. Let's say New York trading session ended there, then the daily candle will open here. The price, it will move upwards on the Asian session. It will continue moving upwards during the London trading session and continue moving upwards during the New York trading session without any intraday retracements. That's why you will see some videos on YouTube where they kind of draw a box on the, let's say, 15-minute time frame, and they find the low of the day, the high of the day, and entering the London trading session, they box, let's say they box the Asian trading session, and during the London trading session, they want to see the breakout on that one. Okay, so there are these things they do. What I will encourage every single one of you to do is to be I will say to be a student. See and listen to what other people they say on YouTube. Read, try, test it, and not to test it to see if these things works. Maybe they work for some people, but you need to blend it into your trading personality. Each person, we have our own personality. And if we can create or restructure somebody's own strategy in the way that it makes sense to us, and we can resonate with the strategy, and we can execute flawlessly without worrying when we are in a trade if our stop loss will get hit, then we will master trading. All right, please keep that in mind. Crucial, very crucial. So for next week, besides, okay, let's see the USD Canadian dollar, and then we're going to check the gold. What I would like to challenge you to understand a little bit is the terminologies. Unfortunately, because most of the traders out there, they are YouTubers, not traders. They are using trading as vehicle to make money as YouTubers. The gap, you see, they call this fair value gap. Okay. So if this is a fair value gap, which it's not a gap, then this is, as this is a gap, how can we call it? In the markets, there is what we call the breakaway gap, which occurs at the beginning of the move. We find out, we name it as breakaway gap after we see a break of market structure. So we know that it was the breakaway gap. The one that happens, the gap that it's obvious and it's a gap, it has a distance between the previous candle's low and the current candle's high, and there is an empty spot on the chart. This we call it runaway gap if we see it in the middle of the chart, and if we see it at the bottom of the trend, we call it exhaustion gap. There are three types of gap. This one here, it's not a gap, it's just a price level. When they say that there is not, the orders didn't got filled and there are unmitigated orders waiting to be executed, that they didn't got filled and the market gap, this doesn't exist anywhere. All right, why it doesn't exist? Because if you take the anatomy, you need to have access to some different chart types. Okay, like they provided in futures trading, all of them, they are under subscriptions. Okay, but because I do have access to these charts and I check them on a daily basis, all these candles here, the long candles, let's zoom in a little bit. All these long candles here, they have two columns. They have the buyers and the sellers on each side. Every single level on this candle, it has buy orders and sell orders. Where is the significant? The significant is in the middle of the candle, because the highest amount of volume that was traded, it started from the middle of the candle. This is what usually happens. Everywhere there are orders, buy orders, sell orders. There is no such a thing as there are no orders and there is a gap in the market. So because the way you speak and the way you understand something, it's going to have huge implementation on the way you're going to execute a trade. So just try to bring yourself around to what exactly is going on in the market. When you see a gap like this, 99.9% of the times, they're gonna be filled. It's crucial, these gaps in the Forex markets, to be filled. If they don't be filled, let me share something with you. Maybe the broker will suffer. So the price will definitely going to come back to fill these gaps. Now, when this is going to happen, that's another story. We don't know when it's going to happen, but we know that it will happen. So next week, I will be waiting for a clear market direction. Honestly, this one here, it's sideways. I don't want to trade sideways market. Compare this market here, guys, with this market here. What do you see? Don't you see a consolidation that broke to the downside and is starting a downtrend? So if you see that here it's a clear trend, you have the authority to choose what you want to trade, right? So why to trade the USD CAD and not trade the Euro Yen, which we explained earlier. Let's check the gold. Finally, last week we said that we identify the first reversal price action. So, and we said reversal price action here, most likely it's going to push the price lower. Now, we also said don't get excited too much because this reversal price action, it can be failed due to the presidential elections in the US. Depends how the market will feel after the elected president. And also because this is in the context of an uptrend. Therefore, the market could just false break here and move to the upside. But again, it was a good chance. It had a good chance to move downwards. Using the hourly time frame, we saw after Wednesday, the price made this lower high and lower low formation. That was a clear fair value price area here. The price entered was a bread and butter trade setup for those that were watching it. Now, our traders on the daily basis, they are looking for a much lower time frames on this one. So they often find trends on a daily basis that they are bullish. They find trends they are bearish, so on and so forth. They are using the market's momentum to trade and send the signals. Alessandro said, if this gap is not a real gap, why they are so important for retesting normally? They are not important for retesting. Sorry, they are important for retesting. But why they are important for retesting? Because if you see the anatomy of this candle as a volume candle, you will see that somewhere in the middle of the candle, there is the most selling pressure into this candle here. Most of the time, look at this candle there. This is the high, this is the low. Somewhere in the middle or right here, it was the majority of the volume. That's why the price went flawlessly up to here, and then the sellers defended again this area and they pushed the price lower. This has to do with the volume, and I'm just telling you the outcome if you prefer it. The outcome is that you see the bearish Marubozu candle. You know that most of the time the 50% area of the candle, it has the most significant amount of volume, and the price will come to test the candle usually up to 50% of it. Now, there are other cases. If this candle, it's going to proceed by a continuously lower high and lower low formation, and the trend is going to be over, and we're going to start seeing trend reversal, then do not expect this to act as resistance for a downtrend continuation. Okay, that's another case. Thank you, Darius. Yes. Guys, I think we cover everything today. Someone asked for the euro. Just 1 second then. So if the euro is weak, I'm thinking to keep an eye on the euro CAD. Why is that? Because the euro CAD it's been a while that sits around this come on, sits around this area of resistance. You see resistance, then resistance. Maybe we're gonna see some kind of push to the downside. Also, you have to understand that there is a fair value price here that, okay, it's been touched, but I think there is a room to move downwards, and next week EuroCAD will be on my watch list on the hourly time frame. If the price will, do you see how strong is this support here? The price has 1, 2, 3, 4, 5. That's the 6th touch. And every time it touched, it bounced off, then it moved upwards aggressively. Bam. So this time, if the price will, look at this one. Here, the price touched the support, and the long bullish candle appeared right after. At this time here, the price touched the support and nothing happened. A bearish candle appeared. It's a sign that the buyers, they are running out of, the buyers are running out of power. After this significant power here, the market didn't create a new market structure. It didn't even come to fill up these gaps, these fair value prices here. So let's see, if the price breaks below here, definitely we're going to go short. If the price is going to start making higher highs, we have these fair value prices here that most likely the market will mitigate them. Now, we don't know what's going to happen afterwards. We need to just see the occasion and to go based on the market direction, actually. Alessandro said, thanks a lot. Learned a lot of interesting concepts even this evening. I appreciate what you are doing, teaching us. Lemo said, how do you feel crypto coins will be next week? They will, I believe they're going to go to the moon. That's what I believe, okay? But always Sundays, they are very attractive for crypto traders, investors. They are, especially on Sundays, you will see that the prices, they just go bananas. Bitcoin is up. It reached the 80K. Ethereum is up very strongly, very impressive. Solana also. ADA, all of them, guys, all of them. Any crypto you touch, it's always, I think it has potential. What's going on with this Pepe? I hear it around. I've never ever looked at that. What's the story behind that Pepe? Dogecoin, of course, Elon Musk is spreading the confidence into the community. Shiba Inu, it's moving upward, and everything. Okay, so ladies, gentlemen, everyone, boys, girls, friends, traders, guys, I have to wrap up for today. It was a privilege and honor to host this webinar for you. I hope you found a lot of value actually on this one. And I wish everyone to have a fantastic evening ahead. Happy trading next from Monday onwards, from tomorrow onwards. And I will definitely be looking to see you again next Sunday. Thank you so much. Bye-bye to everyone. Bye.